In the face of continued volatility, a more cautious stance by the U.S. Federal Reserve, Fed, on rate cuts in 2025, and hard to predict markets globally, equity investors are focusing more sharply than ever on diversifying their exposure, both by sector and size of company. Put simply, this suggests more momentum behind the rotation out of the mega-cap tech stocks which have dominated portfolios over the past 12 to 18 months. Instead, capital will likely flow into segments of the U.S. market that should benefit from the expected growth-oriented policies in 2025 and beyond. Against this backdrop, smaller, and often more domestically focused, companies look set to be the potential winners. In turn, investors should rethink how and where they get exposure. Macro support for small-cap stocks. The impact on demand for U.S. equities will depend on how investors perceive the Fed's latest plans, according to recent statements, to only make 2 rate cuts this year due to stubborn inflation and a resilient labor market. Yet while higher rates generally make U.S. bonds more attractive compared with equities, the potential for the Fed's cautious approach to lead to a stable economic environment could boost investor confidence in U.S. equities. Further, if the Fed's strategy effectively controls inflation, it could lead to a more favorable investment climate for stocks. This has the potential to fuel the desire among investors to diversify into smaller listed companies as the broad rate cutting cycle continues in many developed economies. Until late 2024 we saw a distinctive pattern: when rates were going down, smaller caps did better than larger caps, said Mark Barnes, head of investment research for FTSE Russell in the Americas. In the US, for example, this led to a boost for small cap stocks. Compared to larger companies, small cap businesses tend to have more floating rate loans versus fixed rate debt, explained Catherine Yoshimoto, Director, Product Management, at FTSE Russell. As such, many small cap firms will see their existing loan payments shrink as interest rates decline. In general, with rate cuts creating better and cheaper access for smaller firms to funding, there is more potential to spur innovation, with small cap companies more likely to invest in research and development. Further, there is a knock-on effect on the local economy as small caps may look to hire more employees. For investors, a thriving group of small caps that attracts more capital offers growth potential and diversification for portfolios. At the same time, a Trump 2.0 era also bodes well for small caps, an Impact Barnes said he saw immediately after the election result, when they outperformed large caps during November. More specifically, based on policy pledges becoming reality, certain domestic sectors of the U.S. economy which form a key part of the small-cap universe stand to gain. For example, explained Barnes, cyclicals have been performing well so far, as have U.S. financials amid speculation of a relaxation in regulations. Also in the small-cap space, energy as a sector, along with smaller pharmaceutical businesses, also have potential to flourish, he added. Capturing small-cap success. The performance of the Russell 2000 index in the much of the second half of 2024 reflects the response of small-cap stocks to these macro dynamics. This is to be expected, given that about 80% of revenue from the index's constituents comes from within the U.S., making it more sensitive to domestic policies and the economy. For example, said Yoshimoto, amid optimism in July 2024 about the pace of forthcoming rate cuts, the index jumped more than 11% in just 5 trading sessions. Further, over the 3-month period ending September 30th, the small-cap benchmark rose more than 9%, outpacing its larger-cap counterpart, the Russell 1000 index, which gained just 6%. Meanwhile, the final quarter of 2024 saw the Russell 1000 outperform the Russell 2000 2.7% to 0.3%. Even though the Fed cut rates, long yields backed up on the expectations of fewer rate cuts in 2025. More broadly, there is a good long-term investment case for small companies, which have delivered a long-term return premium, although their performance is cyclical. 1. According to Emerald Yao, head of equity index product management for FTSE Russell in Asia Pacific, this mirrors the focus of the Russell 2000 index since its launch in 1984, to consistently capture the investable opportunity set of innovative U.S. smaller companies. In doing so, the Russell 2000 has helped index users to measure the small cap premium and to gain early exposure to many future equity market winners, Yao explained. Key examples include Amazon, which entered the Russell 2000 index in 1997 before moving to the Russell 1000 index the following year, Nvidia, which entered the Russell 2000 index in 1999 before moving to the Russell 1000 index in 2000, and Netflix, which entered the Russell 2000 index in 2002, and spent 7 years there until moving to the Russell 1000 index in 2009. Investors can also look to capitalize on the Russell 2000 via derivatives as a hedging tools. For instance, The Tokyo Financial Exchange launched Russell 2000 futures in September 2023, and Russell futures listed on CME can be traded 23 hours a day. Further, Asian investors can also access related options on the Chicago Board Options Exchange. The ability to access and/or trade derivatives allows investors in this region greater flexibility and responsiveness to market movements across different time zones, therefore enabling investors to react to market volatility, added Yao. Investing differently by design. For investors seeking diversification in the US, it is also important to address a common misperception that two indexes covering the same market segment must, essentially, be interchangeable. The truth, said Yoshimoto, is that not all indexes are created equal. Every index is the product of choices involving market coverage, construction methodology, and ongoing maintenance of the member list. As a result, indexes perceived to be comparable can have profound, even surprising, differences. The Russell 1000 index, for instance, is designed in a way to provide investors with a straightforward and transparent methodology. It also allows quarterly IPO additions so that newly listed US stocks which meet the index criteria can be included prior to the reconstitution of the Russell Index series. This gives investors greater precision and earlier access to fast-growing stocks, said Yoshimoto. It shows that, in short, your index matters. Russell US Indexes Fast Facts. Launched in 1984, representing a history of over 40 years. Tracked by over $10 trillion of AUM as of the end of 2023. Click here to view more insights about the Russell US Indexes. Sources. 1 Chrome extension f8mnip.jpkulfin/https://www.lseg.com/content/dam/FTSE Russell/n_r/documents/other/the original benchmark for a small caps final 2024.pdf. FTSE Russell disclaimer. Copyright 2025 London Stock Exchange Group plc and its applicable group undertakings, LSEG. LSEG includes 1. FTSE International Limited, FTSE 2 Frank Russell Company, Russell 3 FTSE Global Debt Capital Markets Incorporated and FTSE Global Debt Capital Markets Limited, together, FTSE Canada, 4 FTSE Fixed Income Europe Limited, FTSE FI Europe 5 FTSE Fixed Income LLC, FTSE FI 6 FTSE Beijing Consulting Limited, WOF 7 Refinitiv Benchmark Services, UK, Limited, RBSL 8 Refinitiv Limited, RL and 9 Beyond Ratings SAS, BR. All rights reserved. FTSE Russell is a trading name of FTSE, Russell, FTSE Canada, FTSE FI Europe, WOF, RBSL, RL, and BR. FTSE Russell, FTSE for Good, ICB registered, Refinitiv Beyond Ratings, WMR, FR and all other trademarks and service marks used herein, whether registered or unregistered, are trademarks and or service marks owned or licensed by the applicable member of LSEG or their respective licenses and are owned, or used under license by FTSE, Russell, FTSE Canada, FTSE FI Europe, WOF, RBSL, RL or BR. FTSE International Limited is authorized and regulated by the Financial Conduct Authority as a benchmark administrator. Refinitiv Benchmark Services, UK, Limited is authorized and regulated by the Financial Conduct Authority as a benchmark administrator. All information is provided for information purposes only. All information and data contained in this publication is obtained by LSEG, from sources believed by it to be accurate and reliable. Because of the possibility of human and mechanical inaccuracy as well as other factors, however, such information and data is provided as is without warranty of any kind. No member of LSEG nor their respective directors, officers, employees, partners or licenses make any claim, prediction, warranty or representation whatsoever, expressly or impliedly, either as to the accuracy, timeliness, completeness, merchantability of any information or LSEG products, or of results to be obtained from the use of LSEG products, including but not limited to indices, rates, data and analytics, or the fitness or suitability of the LSEG products for any particular purpose to which they might be put. The user of the information assumes the entire risk of any use it may make or permit to be made of the information. No responsibility or liability can be accepted by any member of LSEG nor their respective directors, officers, employees, partners or licenses for a. Any loss or damage in whole or in part caused by, resulting from, or relating to any inaccuracy, negligent or otherwise, or other circumstance involved in procuring, collecting, compiling, interpreting, analyzing, editing, transcribing, transmitting, communicating or delivering any such information or data or from use of this document or links to this document or b. Any direct, indirect, special, consequential or incidental damages whatsoever, even if any member of LSEG is advised in advance of the possibility of such damages, resulting from the use of, or inability to use, such information. No member of LSEG nor their respective directors, officers, employees, partners or licenses provide investment advice, and nothing in this document should be taken as constituting financial or investment advice. No member of LSEG nor their respective directors, officers, employees, partners or licenses make any representation regarding the advisability of investing in any asset or whether such investment creates any legal or compliance risks for the investor. A decision to invest in any such asset should not be made in reliance on any information herein. Indices and rates cannot be invested in directly. Inclusion of an asset in an index or rate is not a recommendation to buy, sell or hold that asset, nor confirmation that any particular investor may lawfully buy, sell or hold the asset or an index or rate containing the asset. The general information contained in this publication should not be acted upon without obtaining specific legal, tax, and investment advice from a licensed professional. Past performance is no guarantee of future results. Charts and graphs are provided for illustrative purposes only. Index and or rate returns shown may not represent the results of the actual trading of investable assets. Certain returns shown may reflect back-tested performance. All performance presented prior to the index or rate inception date is back-tested performance. Back-tested performance is not actual performance, but is hypothetical. The back-test calculations are based on the same methodology that was in effect when the index or rate was officially launched. However, back-tested data may reflect the application of the index or rate methodology with the benefit of hindsight, and the historic calculations of an index or rate may change from month to month based on revisions to the underlying economic data used in the calculation of the index or rate. This document may contain forward-looking assessments. These are based upon a number of assumptions concerning future conditions that ultimately may prove to be inaccurate. Such forward-looking assessments are subject to risks and uncertainties and may be affected by various factors that may cause actual results to differ materially. No member of LSEG nor their licenses assume any duty to and do not undertake to update forward-looking assessments. No part of this information may be reproduced, stored in a retrieval system or transmitted in any form or by any means, electronic, mechanical, photocopying, recording or otherwise, without prior written permission of the applicable member of LSEG. Use and distribution of LSEG data requires a license from LSEG and or its licenses.